Hi, welcome to this video day, which is on Sunday 10th of September. We're going to be looking at a currency we think could weaken significantly in the weeks ahead. It's the New Zealand dollar. I'm going to be looking at three chart setups: the New Zealand dollar against the US dollar, the Japanese yen, and the British pound. Now, we have done a few videos on the NZD a few weeks ago. We were saying we thought it would go down on the USD. It's gone down a little bit, but not too much yet. But we think it's really going to gain traction to the downside. In terms of NZD against the JPY, that developed into a very nice downtrend. We think there's significant weakness still to come, though. And finally, in terms of the NZD against the British pound, we see the British pound as just out and out bullish against the Kiwi. Now, I'm going to go to the charts in a moment. I'm going to back up my view of the charts by using our favourite tool in Forex trading, the CFTC Net Traders Positions. Yeah, it is our favourite tool in Forex trading as regular viewers. Now, if you're unfamiliar with the tool, there's an explanatory video beneath this one. Just click the link and you can learn more about the tool. Now, in terms of, just in brief, if you want to watch the video through now, what we like to do is trade with smart money commercial hedgers when their positions diverge significantly from large speculators and funds. Now, what we're going to do first of all is we're going to look at the NZD against the USD, and before I draw some levels on the chart, just want to show the CFTC Net Traders position. So let's go and look at the charts. New Zealand dollar against the US dollar, we're just quickly going to look at the COT, the CFTC Net Traders positions, how the commercials in red are moving up against the large speculators in green. Before I go to the most recent movements, I just want to go through just a couple in the past to show new viewers how we use the COT. And I've isolated a bottom here in the Kiwi. Here are the commercials, the smart money. They've gone long, heavily long. Speculators have dropped short against them. Breaks in favour of the commercials. Over here, this important bottom, notice that the commercials heavily long, speculators heavily short. Breaks in favour of the commercials. It's a really nice move to the upside. Now, the commercials, they're hedgers. They just basically know when prices have overshot. When we get up to around here, okay, they start to drop short and they increase their shorts until they're very, very short here. Speculators extremely long right up at this peak. Breaks in favour of the commercials. Now, this is our first initial entry into the pair. Now, they have lightened their positions slightly, both of them, on the decline. They still are against each other significantly in historical terms. That points to any rally in the Kiwi, in our view, being a sell and more potential downside to come. So let us go and draw some levels and look at some potential entries and targets and so forth. Okay, we're on the NZD USD daily chart, and just before we draw some levels and where we think a good potential entry, stop and target can be, I just want to go through these big fundamentals that will be driving the chart. Okay, and also I want to go through a point mainly for new viewers in relation to the COT, which is extremely important if you're going to use it. But first of all, let's go through these big fundamentals. NZD is one of the few majors to fall on the USD in recent weeks. If you think the USD has been very soft, the Kiwi has been even softer. You can see why. RBNZ to cut rates in the months ahead. They'll be doing this, in our view, as commodity prices of their exports will be falling and inflation remains low. Okay. Also, the RBNZ, the central bank, very aware that the NZD is extremely overvalued in terms of purchasing parity, on an historical basis. They want the NZD down, and they're going to bring it down in our view. Point number 4, move from risk to hurt the NZD more than USD. And if you think about it, over the last few weeks, it's been a general risk-on environment. The Kiwi has basically been falling. Point number 5, on the other side, US rate expectations of a rise in the market's eyes are very, very low. But the Fed aren't going to be cutting, okay? The RBNZ will be. Our view is rate expectations can only get better for the dollar. We think there's a strong possibility of a December hike. And even if they don't hike, they've committed to reducing the balance sheet, which is effectively quantitative tightening, okay? So it can only get better for the USD. These bearish fundamentals, the NZD, are not turning around. Now, in terms of when you're using the COT, it's a great tool. You actually get, how would I put it, not bothered about taking losses. And I think, most traders, they are bothered about taking losses. They get angry or frustrated or whatever. With the COT, it's part of the game. I just want to give you an example, okay? Here is the COT extreme. This blue candle here, come back down. This red candle, I want to go short. Goes back above this high, gets stopped out. Now, we know that when you get those COT extremes, always is going to break in favour of the commercials. But they're not losing any money. They're hedgers, okay? We, of course, will do. Because it's just really an indication of over or undervaluation. So we get stopped out. It doesn't worry us because we know that, over the longer term, we will get profits. Our profits will be bigger than our losses. Now, the big blue candle obviously goes up. Then we're looking for a reversal. This red one reverses down. But we want to see a little bit of follow through away from the 75 level, okay? We come back up to test. Then again, and then we're going to come in, okay? So we actually waited for the entry to, get that quadruple top confirmed, or quintuple top, or whatever it is. Now, once we're in, we don't expect the 20-day moving average to hold. We think, the commercials are obviously long. A lot of speculators are short. They're going to get run on stop. Does as expected for us, okay? When we get down to 72, we got our loss back. We got some profit. We thought we'd take it in and just sell back to the 20-day moving average. We're expecting the 20-day moving average to hold rallies, okay? So get in a better price, 72.80. We come down towards 71.50 and we base out on this blue candle. Now, in hindsight, I should have taken the profit, okay? Because it's, a decent profit. It's not a great profit, but it's a decent profit. We're a little bit oversold. Elected to hold, just stuck the stop at entry. What happens? Test the 20, it holds. Then she breaks. So we're flat now. So now we've got to get back in. Now, from our reading of the chart, there's a good way of getting back into this trade with good risk reward. Regular viewers will know what we're going to do. If we do that diagonal line through those 4 candles there, at the bottom of that candle, we've got support now at the 20-day moving average. Once it's broken, should provide support. Also got 4 bodies, so we can have a double trend line support, okay? So we want to see the double trend line 20-day moving average taken out, okay? This looks like exhaustion to us, but we still finish positive. So we want some confirmation. 72.39.20. We can come in through, let's say, 72.30. Where's our stop going to be? Well, you've obviously got these 4 candles here, okay, where this tail comes off. But I always go one level back, so I would go back at 73.80 because I can cut those 3 red candles, okay? So base of that one, top of that one, and the tail of this big red one. So if we come in, that's going to be our risk. Now, is this going to provide support? We don't think so. Our reading of the fundamentals and our sort of experience with the COT leads us to believe that we could go down to at least here, okay? So that'd be our minimum target. But really, I just feel we're going to be going down all the way to 68.50. So we can see how we progress. But it's a decent risk reward. You've got about a 3 to 1. Obviously, if our view is right, and obviously we can see how we run down and manage the trade and bring our stop down as we go. So far, with a little bit of profit out of this one. I'm hoping it's going to become a lot more. Now let's move on to the NZD against the JPY. NZD against the JPY daily chart, and just look at the CFTC net traders positions first of all. CFTC don't release data for the crosses, so you've got to work them out for yourself. We just do it simple. Ratios, so we've got large speculators, 4.8 to 1 in terms of their long positions over their shorts, so pretty bullish of the Kiwi, despite the fact it's had a good move to the downside. Commercials the right way around, 4.7 to 1 in terms of shorts over longs. Divergence between the groups 9.7. Regular viewers will know we like divergences, up towards the 10 level or above. Now, we're now out of this trade, but I just want to go through a couple of points in relation to how we played it and how we're going to play re-entry. Now, if we look up here at this 83 level, okay, we came up to it here, okay, the divergence was 16 to 1. That's a big divergence. So we've come in short. What happens to us? Exactly the same thing as happened to us in NZD USD. That blue candle takes us out. But like I said earlier, when you trade the COT for a while, you do get confidence the commercials are going to prevail and give you, much bigger profits than your losses. We can get back in, or we did get back in through the 20 at 82.60. Then what happens? Then we tumble, the spec stops start to get run. Little retracement there, little retracement there. Now we're down to around 78.40, so that's a 420 pip move. Now, we haven't got all of that move. I've said it in other videos. When you've got enough out of a trade, okay, just take your profit, okay? We figured at 350 pips, we had enough. That was in relation to how we saw the trade, how we saw our overall account equity, the way it was moving. So it came out. And a lot of traders always regret coming out and they don't want to come out. I've always said, got enough, you're happy, just take it. It's fine. You can always get back in or look at another trade. Now, in terms of getting back in, looking at the groups this week, divergence is still 9.7. That's still a pretty big divergence, okay? So what I want to do is get back in, but I just want to wait for a bounce. I just think there's a bounce coming. The candle's pretty small. We're finding a bit of support here. Momentum, stochastic oversold, RSI oversold. So where do we want to re-enter? Well, I think the significant level now is here, or the first significant level in terms of resistance, 79.50. So tail, body, body, then this one goes through there, okay? Also these two candles here, these three here, okay? So I think that is near term resistance that we could bounce to. I've put my entry, or did last week, at 79.40. I narrowly missed it. It just didn't get quite up towards resistance. But I'm going to wait. At the moment, the way I see the chart, that is where my re-entry is going to be 79.40, although obviously I might change that in line with how this chart starts to move next week. Now, where would I put my stop? Well, it's these three candles here I see as the next significant level of resistance up. So back behind that level. So we're looking for a bounce to here, stop back behind here, okay? I've given it a little bit of room, okay? I think the Kiwi is going to be going down. But there's always a spike you don't expect. It might just run a little bit further than the first level of resistance. So I've gone well back, okay? Now, in terms of target, where do I think a target is? I didn't put up the longer term monthly or weekly charts, but it is actually down here at 76. If I get my lines straight, there we go. So if we do bounce up, then we've got a decent risk to reward, a 3 to 1 effectively. Now, in terms of this trade, if we break lower, I will miss it. For me, it doesn't really matter. There's always other trades, but I'm just hoping we get that bounce up to resistance so I can come in again. So we shall see. But this pair has been really kind to us over the last few weeks. Right, let's move to GBP NZD. Against New Zealand dollar daily chart. Let's just quickly look at the COT net traders positions before we draw some levels. Large speculators 4.2 to 1 in terms of shorts over long, so pretty bearish. Commercials 4.0 to 1 in terms of longs over shorts, so pretty bullish. Decent divergence of 8.2. Seen a nice move to the upside in the British pound. I've noted down here the COT divergence was 16 to 1 into the 179 level. And yeah, that alerted us to an entry. I'm just going to go through our trade and where I think potential re-entries are into what I consider will become a very good bullish trend. Now, down into 179, 16 to 1 divergence. We slipped below the 20-day moving average. We want to come through the 20-day moving average, but also the round number. So get through 177. Okay, so basically that is our entry candle coming at 177.20. Finishes nice and blue. Next day we dip to the 20 and push off it. That for us is going to be going higher, and we do go higher. However, when we get to this candle here, we decide to bank, okay, because we're coming up to 180. You can see on the left there is obviously some resistance on the candle cluster here. Sorry, that tail, that body there, a little cluster there. This one nearly poked above it, couldn't make it. So we just thought it'd be a good idea to wait for the 180 level to give way, which it did. And now we're up near enough at 182. So yeah, we've done two trades on this, okay. I think now the 180 level has been decisively taken out. I think, yeah, we are going to be going higher. Now, we did have this tail come back through, but I take this as quite bullish because obviously it reverses straight back up. Our stop behind the 20-day moving average, we're just going to trail it up. So where would you come in if you wanted to come in to this trade? Well, if we dip back towards 180, let's see if it holds and come off the level. If we don't, I would simply come in on clearance of the 182 level, okay? And yeah, there's nothing wrong with buying a breakout high. Very often you don't get the dip. There's plenty of potential upside in this pair in our view. I think we're going all the way up to, sorry if I just draw my line, chart highs. I don't see any reason why we can't get up there. The pound for us is just so oversold. After all that Brexit, worry and scaremongering and so forth, nothing's happened in the UK. UK is probably going to have to raise interest rates. Like I said, New Zealand is going to be cutting. Just see far higher prices in the British pound. Yeah, I put 188. 50 on this chart, but I personally think we could go back up to 190 or above. If you just check the longer term monthly charts, you'll see how far the pound has fallen against the Kiwi from Brexit. I think the whole Brexit decline could be retraced, but obviously we get up to 88.50 in the short term. That'll be good. One point, if we do decisively clean out the 182 level, the stop can be brought up, in my view, to about 179.65. I wouldn't see this tail being tested again. So, I mean, I like the look of this trade. In terms of the COT, it backed up our entry. It still backs up continuation of the trend. The fundamentals for us, out and out bullish for the GBP over the NZD. So that's my review of the three chart setups today. We'll just see how they go in the coming week, and I'll come back and update them. Thank you very much for watching me as per usual.